What's up, investors and traders? Today I'll speak about the stock market, the main indexes, and at the final we'll check the Amazon stock. And let's start with the S&P 500. We can see that its performance years to date is more than 20%. The S&P 500 and the Nasdaq continue to fall. There are many reasons, many fears in the market why we can see this year so weak performance. Of course, it's record inflation, rising interest rates, housing bubble, and etc. So looking at the chart, it's a weekly time frame, we can see that we continue to trade it at the declining channel. Most probably, I think that we can get low here to this lower borders. So most probably we can see additional fall in the future weeks, and I see this index at the level of 3,500 in the near future. The next index is Nasdaq. We can see that its performance year to date is 28%. Of course, down 28%, so very weak performance this year. Of course, when we can see the bond yield racing, the first one who hurt is the IT companies. So Apple, Google, Netflix this year are falling 50-60%. So of course, when the interest rate are racing, so the first who falling is IT companies. And let's check the euro dollar pair. We can see that actually we are in parity now. If we'll check the monthly chart, it's a declining channel since 2008, and now we are trading at the middle of this channel. So now we broke already this support level. The support level was 1,005, and now the target is the lower border here. So most probably we can see till the end of summer 0.18 in this currency pair. And this week, of course, we received a data of the inflation, the CPI. Its current number is 9.1. It's a record inflation for last 40 years. So before we won't see the inflation start to falling, there is no, in my mind, there is no ability, no opportunity for the US stocks start to show a bounce. And the DXY, the US dollar currency index, also is continue to raise. Its performance from the beginning of this year is more than 12%, and for last year also its performance is even 70%. So the US dollar is the strongest currency now in the whole world. So why not? I think that here the target here is 110, and maybe here we can see a pullback, but until we get this zone, this area, in my mind we may see the US dollar continue to strengthen. And also let's check out the US bond. The 2-year yield is more than 3%, and the 10-year is now around also 3%. But the main issue here that we can see inverted yield curve when the shorter period is yield is higher than the longest period of issue. So in such condition, we can see that the bond market is the first one who is react to the reality, to the high inflation, to the probability of increasing interest rates. So of course, after the bond market, the stock market is the second who will start to react, and of course we can see that it's reflected in the all US stock market. And regarding to the 10 years yield, in the future weeks, I guess we will see a pullback. So I'm not sure that from this level we will see 4%, 5% yield in the now. For this time, it's in my mind it's very high yield. I think that till the end of this year we may see the target. My target is about 2% for this 10 years treasury bond. And let's check out the one US stock that I'm heavily buying right now. It's Amazon. So what we can see at the chart, we can see that now we have a support level. It's about 100. Also, its performance from the beginning of the year is less. No, it's Amazon is down 35%. It's a nice correction. The RSI, the momentum indicator at the weekly chart, it's 37. Also nice position for buy. We can see that from this standpoint of view, also it oversold. And let's check the Amazon fundamental parameters. We can see that its total score is 92. It's a very high total score. Also, its financial position, its ratio of debt to EBITDA is less than 2. Interest coverage is more than 10. So is any problem with debt at this company. Also, the ultimate score is more. Now it's 4. If this parameter is more than 3, that the probability of default in the future years is very low for such companies. So for Amazon, of course, these problems with interest coverage, with that, I don't see any problems. So from this standpoint, it's okay. The profitability rank is 8. The profitability rank is 9 from 10. The gross margin is not so high. It's only 13. It's not like Netflix or Google or Apple, but we can see that it's now it's profitable company and its net margin is more than 4%. But here the most interesting point for me is the grow rank is 10 from 10. Just look, check this out, these figures. The 3-year revenue growth rate is 25%. The EBITDA growth rate is 37, and the EPS growth is 47%. Damn shit, it's really very high. It's a lot actually. Last 3 years such double digits, it's a lot. And let's check out the futures forecast. We can see that EPS for the future 5 years is 16%, and the total revenue growth rate is 22%. Also very nice. And let's see the value of Amazon. Now it's 53 P ratio, but the PS ratio, price per share, is only 2.4. So it's really from this for this multiplicator, it's really not expensive. I think it's very cheap. And let's come back to the chart. I would like to see one moment here. The PS ratio for the last years. So now it's 2.4. We can see that such low PS ratio, it's like it was at 2016, but it about 6 years ago. But all these years, Amazon is earned a lot of money, earned a lot of net income, made buybacks. So I think that's also for me why I'm buying now this stock, because the PES ratio is for me is very comfortable, and I really don't see why I shouldn't buy this stock at the current position, because I have the RSI is very nice. Even the monthly is 36. Such low momentum we could saw about 12 years ago. And now of course we are trading at the support level, so I think this also is not bad time to start to buy this stock. So if you like this video, press on the like button, subscribe onto my channel, and see you on the next time. Bye.